there, traders and friends, market participants and enthusiasts right around the world. Thanks a lot for joining me in this mid-afternoon Monday market recap, so to speak. It is a little bit early. We still have about 3 hours left of trade. However, towards or very close to the end of session, I do have a couple of errands to run, hence why I will not be able to bring you this full Monday afternoon market recap. However, it looks as at the current juncture that the markets have collectively decided to push on up off from the support area that we began once again to retest on Friday. Above all else, and the reason for this video is that I want you to understand, as long as this support area holds collectively, this is across the board, not only pertinent to the Dow Jones Industrial Average, the S&P, and the NASDAQ, as long as this holds, you should be thinking about this market over the next 1 to 2 months, running all the way back up to retest or at least to close these open windows. Today, on the Dow Jones Industrial Average, again, this is at about 1 p.m. Eastern Standard Time. We are up 336 points. This can obviously change, but if we do close very close to the current market price, this is going to be an inside day candlestick. And again, if I can just bring up these oscillating indicators, if I can just push the right key on my keyboard, you can see collectively they are crossing on back on up. So again, this is what began to trigger very early on last week. It actually triggered on Monday, but you can see that the MACD appears to be actually accelerating, or at least the fast line away from that slow line. And we are starting to see that of positive histogram acceleration bars away from this midpoint reading just here. So this is looking all very well and good. You should not be paying attention to these exponential moving averages. Again, they lose their meaning when we are in a sideways market sort of consolidation. And you can see if you just pay attention to this sort of rectangular pattern, it looks as though if you disregard, of course, this decelerating type of triangle or descending triangle, it looks as though we are in some form of a choppy type of channel pattern. Again, this works very well with these oscillators which are turning up. Also, I want you to pay attention to, not only do we have this very important macro area of support, this is coming in just below 24,000 on the industrial average, we also have this rising 200-day simple moving average. So this is still holding as support, and when we generally see confluence, and when I say confluence, it is just multiple areas of support, it generally, of course, holds. It can ultimately break, but before I propose that we are going to break this rising 200 simple moving average, we should generally come on back up and close this upper gap up here that I've already just recognized for you, and this will sort of work in conjunction with potentially that of the first major lower high up here. This is all getting a little bit creative at this particular point, but what I wouldn't be encouraging anyone to do around the world at this particular time is to be looking at this market short orientated, not until we break below the support area if it chooses to do so. I'm pretty comfortable with both of these triggers that we've been triggered into. A lot of people actually got in on Monday, also Tuesday and Wednesday. I've been reading through a lot of emails that I've received, so I'm very happy if you were able to price yourself in during the reversals off from this rising 200 simple moving average. The same is true essentially for the S&P 500. Again, we haven't reclaimed, of course, the midweek highs that we posted last week, but this support area is still holding, and it's looking quite good as at, again, the current juncture as at Monday. So again, a little inside day candlestick, up 38 points, so to speak. The Dow Jones, again, just to recap, up 336 as at recording this video, but you can see the pattern. These markets are still holding their respective long-term 200-day simple moving average. Again, the NASDAQ is probably the closest of the three markets to take out the high. This is the high that we posted on Thursday before the sell-off that ensued on Friday, but again, a very nice sort of long day bar that's under construction during today's session. I hope that this does not change and sort of render this market update, so to speak, invalid in a couple of hours, but for the time being, this is looking quite good, and above all else, the support area is continuing to hold. The same is true for a lot of individual companies in our top 12 individual trade list. Although we haven't actually triggered into Apple, we are still respecting this respective support area, coming in at about 168. Amazon is stabilizing after the pretty wicked sort of 3-week sell-off that we have sort of posted. Again, we're still holding above its respective 100-day simple moving average. Boeing Airlines is looking to get moving above 331. Again, that back test of the rising 100. Also the support, which takes us all the way back to really the majority of 2018. 2018 into the late stages of 2017 over here. Very important pivot point coming in at 310. We are holding this, which is good to see. We also have Baidu, which has hit our target, or ultimate target, although I didn't hold down to 217. You can see the reversal coming in after this long day Morobozu candlestick. We spoke about this on Wednesday. So again, although we aren't really seeing true momentum to the upside yet, it looks as though at a minimum we are absolutely stabilizing around these support pivots, and we're sort of basing ourselves for that next leg on up higher. And for instance, on Baidu, we still have open gaps, open windows all the way back up at 250, which are very good targets, so to speak, if you're looking to trade Baidu in the markets as a whole to the upside, right? We've got Caterpillar, which is still stabilizing. We are still moving technically towards the apex of this descending triangle. However, I really wouldn't place too much importance on this pattern. What you need to pay attention to, of course, is the correlation between Caterpillar and that of the broader Dow Jones Industrial Average. If you overlap these two charts, they are extremely similar to one another. And if we are relatively bullish on, of course, the Dow Jones Industrial Average, well, then we should remain so. On Caterpillar, we haven't even actually retested the rising 200. And again, collectively across the board, although I haven't actually brought up the oscillators for the previous stocks I've mentioned, if you pay attention to this and you do a little bit of homework on your own, you will see for yourself that these oscillators are all, at a very minimum, beginning to shift to the upside. If not, they are already turning out of those oversold conditions. So some very bullish signals, mixed, of course, with the candlesticks that we are registering and even potential false breakdowns that potentially a lot of people outside of this analysis were getting, a little bit too enthusiastic to actually be jumping into a bunch of these stocks on, of course, the proviso that they were looking to break down. This is what we call a whipsaw, a fake out to the downside. And we weren't filled, and it's looking to stabilize. And again, we're looking to ride this all the way back on up. It's not going to move in a straight line, obviously, but over time, we should see this occur. Again, between 1 to 2 months. CVX is still stabilizing. Again, 113, 116. We're back up off 116.15, only marginally. However, I'm still liking this pattern a lot. So that's pretty good as well. Some good news there. Google is up another $30 today off from this support area. If we get moving above 1,050, you have to pay attention to 1,131. But what becomes very important is potentially that third consecutive lower high. So we've got the high, the lower high, and then if we do close this gap and begin to reverse, say for instance, at the early period of May, that might offer up another short all the way back down to 1,000 again to test this very important pivot, the psychological round number of $1,000 per share. We've got Google again stabilizing. You can see, I guess, the picture or the theme between all of these stocks and the overall markets being at their respective support areas. We've got IBM again strengthening up $3.40. Netflix is trying to push on up above that 300 handle. We tagged 299.60 just a little bit earlier, so I'm paying attention to this to see whether or not we're going to get a true push above it during today's session. 324 is my target on that stock. Just keeping an eye on it for the time being. Tesla again coming back up to retest this pivot. This is going to be very important because Tesla is a very, very bearish sort of broken technical chart at the moment. It's going to be interesting to see whether or not it can actually overcome roughly 320 to 330. If we can do that, potentially we will shift a little bit more bullish on Tesla, but for the time being, you have to pay attention to 310 to see if potentially we get some major sell signals, which is going to coincide with the back test of this support turn resistance moving forward. So some very important updates for you there. On Tesla also, I've got the US dollar, which is starting to pull back. This was after the tweeted top reversal. This was Thursday through Friday to conclude last week's worth of trade. What's interesting to note is that this is still marginally bullish, and even with the sell-off right now, you can see gold and silver are still relatively unchanged. In fact, gold is up 32 cents, not really giving us a true buy signal, so to speak. You know and you understand my thoughts and, of course, the blueprint for entering into any gold and silver trades. That's on the proviso that the US dollar conclusively makes up its decision as to which direction it wants to move. For the time being, until the US dollar shakes out, you can expect, of course, the trading environment behind that of gold and silver to produce a lot of whipsaws, but overall, just to largely move sideways. And again, if you go back to this particular candlestick here, which at least started this very short-term bullish wave, this was dated the 21st of March, you can see that we still are relatively unchanged as at the current juncture during today's session as well. So you can see the close here, and of course, where we currently opened, or at least where we're trading today, and really the net movement is absolutely zero. So it's important that you understand how to read technical charts, understand some of the intermarket relationships, especially with commodities and the purchasing power of the US dollar, or at least understanding the direction of the US dollar. And if you, prefer to actually trade the market indices or even the top 12 on the left-hand side of our screen, it's very important to understand, the reasons for actually trading the direction which you are, and to hold true your analysis until, of course, the picture changes. And again, just to sort of reiterate, as long as we hold above all of these wicks over here, you still have to remain relatively bullish on the market moving forward. Okay, so on that note, everyone, that will do us for a very shortened or an abbreviated session, so to speak, when it comes to the market update as at a Monday. I hope you had an enjoyable weekend. I hope you are enjoying, of course, your Monday as well. I wish you all the very best. It is James signing off on behalf of Pivot Point Trading. All the best, everyone. Farewell.